This program is brought to you by realestate.com.au. With more homes for sale than anywhere else, realestate.com.au is Australia's #1 address in property.
Welcome back. Across the country, there are 2,810 auctions, up 42% compared to last year. In Sydney, there are 891 auctions. In Melbourne, there are 1,143 auctions. In Brisbane, there are 143 auctions. And in Adelaide, with 158 auctions. In Canberra, there are 80 auctions. On to the most viewed auctions this week in New South Wales. 1/34 Croydon Street, Petersham, topped the list. It's a renovated 2-level townhouse with a price guide of $1.1 million. In Victoria, 24 Old Reservoir Road, Belgrave, is the most viewed auction. It's a 3-bedroom retreat with plenty of nature and a price guide of between $650,000 and $715,000. 708 East Currumbin Creek Road in Currumbin Valley is the most viewed auction in Queensland. It's a modern 3-bedroom home and comes with 10 acres of farmland. In South Australia, 49 Hill Street, Mitcham, is the most viewed auction. It's a 1930s bungalow with a price guide of $1.1 million. Lastly, 2 Pilbara Street, Whitegum Valley, is the most viewed auction in Western Australia. It's a 4-bedroom home that has recently been remodelled. And that takes us to this week's top listing and, well, to say it's a fixer-upper is an understatement. The 6-bedroom property at 1 Columbia Street in Paralowie in South Australia is being sold as a renovator's delight. You'd have to be very big on renovating. It's a corner block with a large 618 square metres of space to play with, or knock down. Buyer beware though, the listing says. The property will be sold in its current condition with all the contents included, especially in the yard. The auction is set for tomorrow afternoon and is expected to go for just under $500,000. Well, for more insights on property data, I spoke with Eleanor Creagh, Senior Economist at REA Group, a little earlier.
Auction volumes are remaining unseasonably strong at the moment. Selling activity remains pretty robust. So we've got a little over 2,800 auctions scheduled this weekend. And certainly this uplift in or this strength in auction volumes is indicative of strong vendor confidence, likely with the continued home price growth that we've seen throughout much of last year and this year as well, playing into seller confidence. But also the continued strength in auction clearance rates as well, in terms of incentivising sellers to continue utilising auctions as a selling method. So despite the uplift in auction volumes that we've seen this year, with auction volumes around 40% higher than this same period last year, we're seeing that clearance rates are remaining pretty strong also. So probably incentivising this continued strength in auction activity around the country.
Meanwhile, the below $400 per week rentals are at a new low. This means more pain for renters, right? Especially in Queensland and WA.
Yeah, look, that's exactly right. So we've seen that nationally, the share of rental listings that cost less than $400 a week has hit a record low. So that share is now sitting at just a little over 10% in April 2024. Now, if we cast our minds back to the pandemic onset, that share was a little over 40%. So closer to 1 in 2 rentals were costing less than $400 a week, rather than now closer to 1 in 10. Now, in markets like Sydney and Melbourne, that's even worse. So if we take houses for rent in Sydney, for example, just 1 in 50 houses for rent in Sydney are now priced at less than $400 a week.
Do you see home buyers actually holding off until after the tax cuts so that they can borrow more? And will that drive up prices starting July?
So looking at the outlook for home prices over the months ahead or for the remainder of this year, we are expecting that home prices are going to continue to lift. We've seen that home prices have continued rising so far this year. And certainly I think that continued uplift in home prices is incentivising some to transact sooner and overcome that deterioration in affordability, given that they're expecting continued price increases. Now, we are approaching that seasonally quieter winter period. So we probably probably will see the pace of home price growth slowing throughout this seasonally quieter period, particularly with interest rate cuts expectations having been pushed back to late 2025, although we do know that we have this continued fundamental demand-supply imbalance that is likely going to fuel a continued lift in home prices. And certainly when those tax cuts come into effect into July, we will see that households potentially have a little boost to, or some households potentially have a little boost to their borrowing capacities, which could further incentivise activity throughout the second half of this year.
Just back to easing the rental shortage, can there be any meaningful short-term action that can be taken to lift supply? You know, I've been reading about granny flats.
Certainly when we look at the rental market at the moment, vacancy rates are close to historic lows. We have seen vacancies ease over the past couple of months, but really we know that vacancies remain very, very low, and in those conditions, it's going to be very difficult for many to find an available rental. And really the only way to sustainably ease these crisis conditions that we're seeing in rental markets right around the country is an increase in available rental supply. So really, that would mean building more homes, but clearly this is something that's going to take time. So an uplift in investor activity, utilising our millions of spare bedrooms better, incentivising downsize activity are all ways that we can better utilise existing supply, but really adding new supply or adding more available long-term rentals to our pool of long-term rentals is really the only way to sustainably ease these rental pressures.
What are you hearing from builders? Because new home building approvals are actually down too.
Now, the construction industry at the moment is incredibly challenged. So we know that we're continuing to see a slowdown in the completion of new homes and a slowdown in new construction. Building activity remains at decade lows. Commencements and completions as well are also at decade lows, with the construction industry really challenged by higher financing costs, higher materials costs, and of course labour shortages. And all of these pressures are culminating in a continued constrained housing supply environment that doesn't look like it's going to ease up anytime soon. So we know we've got this stronger home buying demand environment buoyed by strong population growth, tight rental markets, home equity gains of recent years. But unfortunately, we haven't seen that the supply side of the housing market has been able to meet that stronger demand environment. And that's one of the reasons why we're continuing to see home prices lift, despite interest rates being much higher over the past 2 years.
Thank you so much. And the outlook doesn't seem bright, but can't get much worse. Eleanor Creagh, Senior Economist at REA Group.
Thank you for having me.